Good afternoon, everybody. Hope you're doing well today. Let's dive into the daily market recap. Let's get my screen situated here. All right, so markets just closed and S&P closed right at 6920. So this is that pivot, a previous all-time high, 6900, 6920, pretty important levels to watch over the last couple of sessions. And we just kind of back tested this 6900 spot today, held and closed right on 6920. So, my take on the market just continues to be that it's business as usual. The market's doing what it needs to do in order to keep the current move alive. And when I say current move, I just mean the near-term trend, right? So we've been trending higher. We made new all-time highs. We pulled back into the trend. That got bought out to new highs. Now we're pulling back. They back tested 6,900. So the higher lows pattern that we're getting and it tightening up a little bit is just a continuation of the trend. And until that were to break or get shaken up with either a catalyst or just technically getting some digestion, we just continue to look for the same things. The dips are buyable to me, especially the fact that we made a new high, even though we pulled back shortly after. Make a new high keeps that open, the trend open and available for the dips to continue to be bought right back out to new highs. So to me, the session from a trading standpoint, I mean, I have no interest really in trading that personally, unless you're looking for a pin or something, or maybe very short-term scalps for whatever reason that you might have with whatever strategy you're trading. But broadly speaking, and just in general, individual areas of the market are definitely more in play right now. We're getting some big moves in memory. SNDK made a very big move today to the downside. SLV is still in play. Big gap down again today. That got completely bought back up and is looking really good. Caught this. We'll go over it soon. And then some defensive names as well. So like NOC. Big movement today. Nothing really easily tradable, I would say. XOM and CVX moving pretty big. So we're just getting the start of the year, kind of some themes starting to build, some narratives building. And throughout all of that, a lot of digestion across the board too. So certain names definitely moving better than others. Amazon, for example, moving really, really nicely, while many others are either disconnected from that, like Apple, or just chopping around. Okay, so the point of me saying all that is to emphasize the importance of stock selection. You've seen me be very selective this week. I've pretty much only looked at silver and SNDK for trades. Haven't caught everything perfectly, but I've done very well. And that's really all you need in these markets is when things are, the market overall, this is getting a lot of barcode action. Not that there's not trades that can set up, but where you're going to make the most money is in some of the bigger themes. And so with that, let's dive into a couple of reviews. So SNDK, this was a really, really good trade today. And I think there's an area for me to improve on. I feel like some of the fade ideas, I've not caught as many in recent months, whereas 22, 23, I was catching a lot of fades. In fact, the downside was some of my favorite to trade. And I think just my rambling, I think the reason for that is just because of the general market. The market's been holding up. Obviously, we're in a more of a bullish overall market. So sometimes that can be a little bit of a disconnect and make it more challenging. But objectively here, this was a really nice fade. And so there's actually an intraday bounce too. I called out that trade in the chat. I did participate with shares, and this was a really nice catch off the lows. The options moved pretty good. Probably could have traded that. I just wanted to be a little bit hesitant just because of how big of a move this made to the downside, and remain selective, especially with options. So anyway, so let's get into the review. So the aggressive entry. So this is an opportunity for us as we prep to do kind of like an if then. And what I mean by that is we have obviously a huge breakout this week, a really nice high and tight consolidation candle yesterday. The dip was bought, telling us that there's available energy for this to squeeze. Okay, now what we were looking at into the open, because things were a little extended, was if it could hold 355, 358, this box and either hold or sweep and turn very aggressively, that could be a really good squeeze candidate for the upside. Now, what we didn't talk about, and I think the area for improvement is if that doesn't happen, right? The reason I avoided longs at this point, and you heard me call this out on stream if you were there, that this is like too deep of a pullback, right? It's a little too aggressive, and Space Monkey said the same thing. It's a little too strong of a dip to try and catch. Like, it did start to sweep a little bit and start to bounce a little bit, but I didn't enter calls because that wasn't what was in our plan, right? For the momentum to stay present, I wanted to see a very quick move higher off the open for the squeeze play. Now, the opportunity to get better, I think, here is recognizing that and flipping to the other side. Recognizing that, okay, or just posing the question faster. When do you flip sides? And it's okay if you aren't perfect and super fast to do that. I don't know that was really a great idea initially going into the day, just objectively, just given how strong everything was and the market was holding up, right? So it did what it did. And if I'm missing something you guys think is important, let me know. But if you're at least open to thinking that, then there's other opportunities I think could have been good to catch. And so realistic entries, the most aggressive, I think realistically and objectively, would be the break of this pre-market pivot. All right. And then certainly more up my alley, and something I feel I should have caught is a break of the prior day low. So the break of the prior day low also happened to line up with ATR. So ATR was at this 329, so -1 ATR. I thought maybe we could bounce a little bit there, but the point and the more important thing with this, if we go to 5-minute, is when it started to bounce, it didn't put in a clear entry signal. We did talk about this on stream, that maybe an aggressive failed breakdown, if it turns or sets up the right side, could be good for longs. But the key here is what did happen, or what happens if that doesn't play out. We have this very strong momentum move to the downside. You're testing the prior day low that lines up with -1 ATR, and you have synchronicity across the board with Micron also selling as well, right? And NVIDIA was also selling. So there's multiple things lining up. So you can reasonably look short. And if it fails, so the key to me that makes this even stronger is that you did get some kind of reaction. So it did react to that, which validates what I just said, right? It validates that, okay, this is an important area, prior day low, and also -1 ATR. It got some kind of reaction. And the fact that it got a reaction but then didn't do anything, didn't even attempt to really bounce, and just started one time framing on the 5-minute lower, that is a really, really nice short. Now, just if I were to have traded this, proper sell rules to me, because it's made this big of a move, is your expectation is for it just to keep one time framing, right? If it starts to react bigger there, then you want to flip and think alongs. Even if you're not aggressive with the entries, you want to be, flipping the mindset. Okay, can this put in a failed breakdown and start to go higher? Where can I get involved in the upside? And so your sell rules can match those expectations by simply trailing the prior bar, right? So you trail this prior bar around the break, and if you want to give it a little bit more room, I do that often as well. I think that's fine to give it a little bit of breathing room, but the point is it's one time framing on the 5, and you just want to follow that, right? If you have done that, even missing this whole big initial rejection, you're talking about incredible risk rewards. Even with a late entry, a low a day, they're not necessarily late, but just with that entry, you're risking about 4 to 5 points. And this doesn't 5-bar trail until 12 points, right? So 1 to 3 risk reward, still a really good trade. All right, so those are my thoughts. That's how I would have traded it, or would have liked to have traded it. You could have been with this aggressive entry, caught a really nice waterfall once you saw it attempt to turn and fail. That's obviously even better. But this trade down here at the prior day low just goes to show you that even after all of that, there's still another trade. Now, for this reversal back higher, this is pretty simple. So buyer or sellers just start to get a bit exhausted, and there's some signs that you can look for a bottom to be put in on days like this. And the fact that we were extended below -1 ATR and just above 300 psych level made this kind of interesting. And you think of it from the seller's point of view, if you're failing to get to that psychological level of 300, and you're already kind of extended, you start to get a little nervous, right? And what basically happened here, if we flip on the EMAs, it's a little easier to see. We started to kind of catch up, and you're looking at the 5 here, and this just began to kind of tighten, and then you get this pop right over the back above the 921 EMA and out of this consolidation, right? So at this point, just psychologically, right, you failed to get to 300. If you're a seller, you already have won on the day, right? If you're selling today, you're up really, really big. So what reason do you have to try and be, greedy and extend gains if price and participants are not carrying it through after the consolidation? You're kind of getting out of the way. You're getting out of the way, so you're covering, shorts are buying to cover, on top of the fact that big picture, what do you think that people that miss this move are thinking? They're thinking, where can I get in on a dip, right? So there's a kind of double whammy here that makes this a pretty darn good trade to me, where sellers just kind of get caught off sides, and then maybe some renewed buyers that missed the original move are like, okay, I'm going to buy the dip here, right? So those things paired together, to me, you risk low of day. You're risking about 8 points. This moved a total of 16. So you could also risk the prior bar as a more aggressive idea, which is about 5 points for a total possible gain of about 13 there. So overall, that was really nice. It's a good example of trading the right side and waiting for that to set up versus like guessing on the way down where to get long. Okay, so spent a little bit of time on that, but I do think that was a really good one to review today. Of course, I didn't manage to really do a whole lot with that, but it's very helpful to get the rep anyway and talk through it. Other trades I'll rip through quickly. XOM made a really big move today. So this is a reclaim. I would categorize it as more of a reclaim trade. You got a key level here. This is a local high at 120, just about 121. It's also around the low of the the day two following the catalyst. We sold pretty heavily back into that spot, gap below it, and just reclaimed it. This is fairly nuanced to me. I don't view this as easy, but it is a trade, right? So it's a reclaim of that key level. You can kind of notice, and we called this out around here on stream, that, hey, XOM is really strong. And so you could just take the break and look for a prior bar trail on a breakout, treating it like a momentum trade because there's momentum, or even a trend trade, risking like the opening range high or something like that. It worked. It did well. Maybe not my cup of tea necessarily, but I wanted to call that out. Baba was a good call by Sarang. So he was looking at downside initially, but this ended up putting a failed breakdown in. And I think there's a little bit of a wait and see going on with the Senate ruling that we're expecting with tariffs and all of that. So if this holds, then you can kind of see how sellers would get off sides with that ahead of us and not having clarity yet. So uncertainty works both directions, right? Sellers get caught off sides just as much as buyers de-risk and get out of the way. This was down, so the context is this gapping down, starting lower, starts to push higher, and just put in a really big failed breakdown. Very nuanced. I would not put that in like the easy category, but it made an incredible move and did well. So he called that out, and I thought it was worth bringing up. Okay, so that's trade reviews. We already talked about S&P. I won't get into that. Active positions, no real change for me other than silver today. I got back involved in the silver trade. Really nice timing on the entry. The 68 calls, by the way, did really, really well today. If anybody held runners, you saw me take this turn here, and I should have added that to the list. I don't know why I didn't. So we gapped down. We held this pivot. This is a very crucial pivot, 67.33 or 67.35. I took the turn and used close to the money and pretty much at the money calls for 1 DTE and basically just scalped this move. And then rolled that capital, those profits into a swing for next week's 70 call. Those are about 20%. It's nothing really great, honestly. It's not bad. I'm not complaining. We got the right direction here. This has been gapping all over the place. So what I will do here is just kind of let you know, like, that's a way that you can kind of fund the idea trade, right? So my idea on this, I'll get to in a second. It's been kind of the same if you've been following along, but you can use day trades if you're ahead, especially to kind of create cushion for swings and the idea. And that's what I did here. I probably could have been more aggressive, waiting a little longer. it would have obviously paid better, but because my thesis was we could trend towards 70 to 71, and we ended up doing that. So maybe a better trail or something could have been a good idea before, rolling into the 70 calls, but it worked good. We made some cash and then put the cash into the 70 call, which is now up also about 20% here. So anyway, all of that said, big picture on silver, what I'm looking at is just the way that the breadth of the candles is acting at these levels. We're really just holding the 9 EMA and we're basing. So this is like the play is catching its breath. And the fact that buyers have stepped in twice in a row on gap downs should give sellers a bit of nervousness, right? Now, I have said from the start, I'm not an expert on this trade in terms of the macro. Okay, so I'm not going to try or act like I'm going to speak intelligently on what's going on with everything or try to piece it all together. That's not what I do. I've been reading about it, following along, and there's a lot of different takes. There's a lot of different opinions, and I'm not going to get into any of that. The point is, and all that matters to me really, is that it's in play, and it's largely in play. This is a very huge trade going on, and so I'm just looking to navigate it the best I can, technically based off what I know on how these plays typically go. And one of the big signs of a trade like this being done is it really starting to extend and get kind of carried away. And I shared a thread on X that you can reference of several examples of exactly what that looks like. And regardless of what's going on fundamentally or macro wise, they tend to just play out the same way in some form or fashion. It's not always the same exact, but the same concepts usually apply. And so to simplify that for you all, you can just look at the slope. The increase of the slope is fairly standard rate of change. It is starting to get a little interesting, right, with the breadth of these candles picking up, but it's not gotten crazy. And I think in order for a really good reversion trade to set up, it's got to get a little crazy, right? And maybe silver won't do that. I don't know, but that's what until that were to play out, or it just really starts to lose its trend, I'm going to continue to look for upside with a little bit of bias. And so today, when we gapped down to 67.35, I was ready to short if that failed. I thought that could be a good short, but it didn't. And then we just started to push higher. So I just was like, okay, I'll get right back in with the longs and hang out with them for a little bit. And so until I see bigger signs, I'm going to keep that lean. And so far, it's looking good. We'll see what happens. Volatility is expected to continue, and we could just gap down 10%, or we could gap up 10%. I'm looking to keep a core swing on with reasonable risk. That's nothing too concerning, and then day trade around the opportunities as it starts to hopefully speed up. All right, so big picture, holding 9 EMA. Let's see if we can get some acceleration, maybe a gap up over highs or something that gets people chasing it. Let's see what else. Nothing else with active positions really. Watch list for tomorrow. I'm gonna go through this pretty quick. Some good plays, but there's also a lot of messy charts out there. Like software, for example, just got sold right back lower today. I think the market's just kind of working some things out right now. For SNDK, this is a big buy off the lows. We might need to see the 9 catch up a little bit, but this is only day 2. Today was day 2 of this breakout, and day 3 if you count day 1. I guess that makes sense. So this is your day 1 breakout, day 2 consolidation, day 3 another day of consolidation. A little more nuanced here, but it's in play and worth watching. If we hold back above this 331, or even better, like gap up, and then start to push, I think this still is alive for squeeze up to 400. We'll have to just see. If we're below that, I think it's like the 9 EMA becomes more probable. So I'll keep it that simple for you. 331 is a pivot going into tomorrow. I think it's tradable higher with higher probability entries if it can clear highs. That's where the squeeze is, and a risk of chop in between, but could create some nice risk reward longs targeting those highs. And then below 331 is, to me, a short or hands off with a target of the 90 MA big picture. So it might take a couple days, but this is still moving tremendously. So it deserves our focus. Amazon's been an awesome trade. I really like this one this week. This is a good example of a trade you like, but focus is just elsewhere, and you don't catch them all. But this is getting some really nice expansion, and I think that's something we haven't seen in Amazon for a very long time. I'm very curious to see if it continues. So tomorrow, look for ideally dips to hold above 245. If it keeps this high and tight kind of range, I think we can get a push up to 250. SLV we talked about, so I'm already positioned for it, but I'll look for day trades. XOM, harder chart to me, like to day trade, but over today's high could be something back up to 126. Still a lot of headline risk on that trade. HUT stood out to me, HUT. So you have a not technically, but essentially a triple inside day or triple consolidation day here, right at this local high, 59.76. This is actually, okay, it's not all-time high. It is the local high. You have a high, previous all-time high at 65. It's a target above that, and then nothing until 82. So this looks technically pretty good. So watch that for a technical breakout. Airbnb, really nice day. Big picture, kind of crappy chart, but near term, holding 90 MA, 921 really well, and pushed up nicely toward the end of the session. Closed strong. Just a technical play, but could be maybe a decent swing if it continues to hold. And then DE had a big day today, so look at continuation going into tomorrow. Pretty straightforward. 500 psych level. It's also a key level that we can plot, and if it holds that, look for continuation up towards 515 next. All right, that's what I got for you. Tomorrow is Friday. We have non-farm and unemployment rate scheduled for the economic calendar. Should be interesting. Wait to end the week. I can't believe it's already Friday. This week is absolutely flown by. It's been busy. So I'll see you all in the morning. Have a great rest of your night. And yeah, see you in the morning. Bye.